Like we're going pretty good. All right. Hey, YouTube. Howdy, YouTube. Welcome back to the Costas Verde show. Hopefully this royalty-free music, background music is not too annoying. Even though on my channel and Discord and my YouTube Cryptillion tiers, I've pretty much prepared everybody for what happened today pretty damn well. In terms of, not for sure if I can think clear with this music. I'm gonna try to turn it down a little bit. That might be better. Bitcoin doing some wild ass stuff on the release of CPI data. It did a quick juke to the upside. Here, let's do this. Let me go down to the 5-minute chart. So even though the initial move was down, the whales and their algos made sure that people in shorts here at the right before 8:30 that they got booted out, and then it went down, and then it swung the other way. So on my channel since Monday, I've been trying to prepare, and I think I did effectively prepare both YouTube for free content, my YouTube tiers with the updates, and recorded videos from Discord, and then Discord with the whole community being on the live calls as they join and the updates that they get. Been preparing everyone for bi-directional volatility, so both directions within a specific range. My guess was 9 or 10%, and in the end, it was 7.8% right behind me. Bi-directional volatility, so from top to bottom, 7.5%. And the lines that you see behind me, I've been talking about since Monday as well, and it has interacted with them extremely, extremely well. However, the odd thing about this, even though Bitcoin price followed plans almost as expected, besides this little juke right here, or this one, the head fake up before it went down, that usually doesn't happen. But even though Bitcoin went as expected, it still looks like a circus, and to me, it's still surprising as hell. Now, the big question is, because the economic data released was pretty damn negative, and it essentially guarantees Jerome Powell will continue with his 75-point basis rate hike, which is bearish for the stock market. Will Bitcoin so stock market and Bitcoin will follow, but will they get a rally first to just destroy shorts, and then the same people who are shorting try shorting again, then it goes even higher? I mean, we could actually get a green October because of all the flooding of shorts that are coming in from the small money, and then the big money can see all that liquidity up there, and it's possible that a short squeeze is going to be initiated. I just got off of a VIP call letting them know I think either Bitcoin's going to get rejected and the stock market will get rejected from this point, or do one more FU candle, FU move just a couple percentage points higher and a failure pattern above the daily 21, and then come down to make new lower lows. That was my main guess, but my VIPs kind of rebutted me the entire hour right before jumping on here, gave me really provided very solid evidence that Bitcoin could go significantly higher off these lows. I'm not going to share all that information with you because that's going to be more exclusive to Discord. And for Discord and the Cryptillion YouTube tier, I've already shared the recording of that video, so you can go check that out. But for everybody else, I will give you the skinny on being prepared for a large rally up, even though macro bearish is still happening, right? And I'm going to give you the exact threshold to look for when you can flip sides and say, shit, this is probably, this is the tipping point where it becomes probable that a rally is going to happen. And I'll tell you what, when I give you that threshold, it's so easy. And I don't think there's anybody else out there that's going to tell you this tipping point. And it's so simple. So let's go get some damn Bitcoin. Now, in my previous videos, I believe I only pulled out this horizontal when I mentioned it would be a 5% up and 5% down. So at that point, I was guessing that this area here was the middle point, and actually it roughly is. And I only had a moment in my previous videos where this last part showed up, but I drew down 5% down, even below 18.2, right? So expect this area. And then the rest of the videos, you didn't see this in play because I like to zoom in a little bit more. But, and then, so you can see from the middle point, just remember this. When there is particularly, the ones that get the biggest moves are CPI / core CPI. It usually comes at the same time, same day, same exact moment, and FOMC, right? So make sure you're paying attention to that, because if you're trying to actively click around with your money and trade Bitcoin, whether it's spot or futures, you have to pay attention to that. Because obviously, looking behind me or looking here, you can tell why. And so from this middle point, we got what percentage down? 4% instead of the, I guess, maximum tolerated for a move is 5, right? So whales don't move Bitcoin more than 5% in one direction on CPI or FOMC. And so this middle point going up, it's only 3. So technically, it has room, if it's going to be symmetric, to go another percentage point up from where it has already gone. So let's measure that out. And that would be the FU move that I was talking about. So an FU pattern, just one more spike above to get the last shorters out before bringing it down. That is my idea number 1. All right. And I've gone over on my channel a lot how in a bear market, you have 2 major bear market rally targets. So in a bear market, if price of the stock market, it works for the same. SPX, all that stuff, and Bitcoin, it's the same line. Your 2 main targets for a rally in a bear market are the daily 21 for your smaller rallies, right? And your daily 89 for the big ass rallies. So returning viewers, you were familiar with this. And returning viewers also know. So new viewers, if you're hearing this for the first time, just realize if you start watching my channel a lot, you're gonna be drilled, and you will know how to handle this price and how to do your own TA pretty damn well. But and on top of that, so this is the daily 21, the L line, which it's touching right now, bear market rally, right? Even though this is bear market whale games, there are 2 primary ways that price interacts with the target, either the daily 21 or the daily 89. Either a rejection, which technically right now, this is a perfect rejection, or a failure pattern, which can go 1 to 3% above the target, and then when it comes back to touch it, it falls through, which is why it's called a failure pattern, right? So for new viewers, since I'm going to train you hard, if you're coming back to my channel here, make sure you subscribe and hit the bell for all alerts so you can stay in tune with all my altcoin updates as well. And then returning viewers, this is the time on the stream to go ahead and hit the like button and leave me a quick emoji comment. If my clone scammer, who has Costas Verdes in his name, the same thing, I just can't get rid of him. So he's a real person too. I've already confirmed that. But I'll delete his comments. Just watch out for that if you leave me the comment. I'm pretty good about deleting my clone scammer. And so let's dive into what that threshold is when we can instantly flip the probabilities of crap, this is going to rally, as opposed to Costas Verdes or Tim's main guess that it's either going to get rejected or a failure pattern on the yellow line or daily 21 and then make new lows. That's my main idea, but I'm getting ready to show you almost very likely exactly what you'll see if that's wrong. I want to prepare you for the opposite first, because really, it really could go either way here. All right, so let's dive into that. Make sure you follow me on Twitter, new viewers, Costas Verdes with the number 2 afterward. And then the Discord links and visual instructions are in the description section of my non-streamed videos. And then on my non-stream videos, there is a join button right next to the subscribe button. If you click the join button, it won't take your money right away, but rather a 90-second video will pop up with pirates and skeletons telling you what the YouTube tiers are about. All right. Very simply put, the threshold for, I guess, a probability flip on either go up or go down is right here, the daily 21. But for new viewers, I need to spell out how price will move on this line. So even though this is a daily EMA, I'm on the 5-minute candles, right? And I have a ton of people in my Discord who don't have access to this MTF EMA, the same one, and I need to do a video on different ways to pull this up on 5-minute or 1 minute or whatever, because it's extremely important. What I'm about ready to show you, new viewers. For returning viewers, just bear with me. You've been drilled on this a million times, but the importance of this is when there are fake outs. One primary among the few primary ways that fake outs happen is candle closures above a threshold, which would then invite buyers to buy more after that candle closures, right? And so if you get a daily candle closure or an hourly candle closure above here, it often is to lure you the wrong way. But what I'm about to show you, using what's called an MTF EMA indicator, which all that means is I can look at a daily EMA on a 1-minute chart, or a daily EMA on the hourly, or daily EMA on the 5-minute, whatever. That's all MTF means. And so that's where this comes into play, because what is a better signaler than the daily closures, which are often fake outs, is what I'm about to show you. So this is very important, new viewers. Like, you need to remember what I'm going to show you. It'll be extremely valuable. And if price does go up, there's a damn good chance what I'm about to show you is exactly what happens. And my returning viewers already know, like, that happens quite a bit. All right. When price gets above here, so I'm not guessing the exact moment it gets above. I mean, hell, price could come check one more time, then go above it. So how it gets here is irrelevant. But what you'll see once price gets above here, it often makes it'll often make a jab through. It's kind of like this is a like you got to poke a balloon, right? But it's stronger than a balloon. Let's say, what is it? I don't know, like in Taekwondo or karate, you got to break the board, right? Like, those competitions, so this is an obstacle, and price has to push through. It usually just doesn't go, you can't break a board by going, like the board won't break. And price kind of reacts the same. So when an obstacle, which this is clearly the obstacle right now, right? When an obstacle is broken, it usually jabs through, which we might actually see this happen right now. It usually jabs through and establishes a first high on the low time frames above the obstacle. And then it'll come back down. Sometimes it'll go a little bit below, but usually it'll stick its landing, or if it does a couple candles below, it'll come right back above, then use it as support. And at this moment, what you're seeing right here, after it goes above, makes its jab high, so its first high, comes back down, and then finds support on that. At this moment you're seeing, because you will see this on the chart, it's roughly a 50-50 still. It might actually be a slight edge towards the upside, which would then initiate a large rally up, perhaps to 21K or higher. But at this point, it's kind of a 50-50. And the moment that you can totally flip probabilities, like, man, it is probable that this won't be a failure pattern above here, and it's probable it's going to the next target, which is exactly 20K, which is the September candle open, the next target up. So at this moment that you're seeing is 50-50, but it's when it takes out that first jab high. So let's just label it at jab high. It's at this moment right here. At that exact moment, right? That moment, that's when the probabilities flip. And the information for, new viewers or returning viewers who haven't seen me talk about this, this is information you need to retain, all right? Because it's going to help you drastically for any asset, whether you like XRP better than Bitcoin, the price of oil, the price of the dollar, it doesn't matter. It's all, even the price of black market testicles and all that stuff, it moves the same. Sometimes you get a little variation right? So another couple ways it could do is it does a jab, it does some support, and then it goes higher, and then finds support again, and then it comes, then it either break. Actually, if you see this happen, it could still go either way. It's not probable until it takes it out. So sometimes you do get that jab move up, and then it comes back down, but still, it often finds support. So if you see something like this, like the jab is taken out, but it still comes back down, what you're looking for at that point is when it touches this, does it use this specifically as support, or are the candles coming below it like this and then it works its way above? And if that happens, if it finds support just below, at that moment in this structure, like a 1-2 jab, if this happens, then it's statistically more probable that the next move up is a lower high to this and then it breaks down. But if you get this double jab deal where the first taking out of this of the first jab high, so it took it out here, right? If it comes back down, but it can stick its landing like exactly on the 1 minute candles, 5 minute candles, like it doesn't close a candle below. If you see that happen, then it's still probable it breaks out. But it's all about how it lands back down on this, I'm telling you. However, that rule that I'm talking to, so the reason I'm going like in depth on this small chart stuff is because this is the pivot point. Like this exact like 1 minute candles at this line are essentially going to quote unquote dictate the price of Bitcoin for the next 2 weeks. So even though I'm on this micro time frame, a lot of you might just say, oh, give me the direction for the next couple weeks. I am. And I'm telling you how to see that. And I'm showing you exactly how it'll move under 3 different circumstances. Like it will move in one of those ways I just showed you. With it, like it's I guess there's a small chance it won't. I guess there's a small chance it'll just bust through and, go to the heavens, right? But there's a very high chance that one of those 3 ways is exactly how it'll move if we do get a break up. So that is your threshold and exactly what to look for and how to look for it. When to say, damn, this is not going to be a failure pattern. We're not going to get new lows soon. And I need to start considering or just do it to flip long. I either just need to flip long now or strongly consider flipping long, which means stop trying short. Because the next, where will Bitcoin go if you see all that happen and it does take off? Well, the next, let me go to the 1 hour chart. All right, so now we're not on the 1 minute and 5 minute candles. All right, so the next thing in play, I'm going to go to the 15 minute. The next thing in play is 20K, not just because it's psychological number or the previous market cycle top, which are add-ons to this, but it's the September candle open. The September candle probably opened there because of those previous things I just mentioned, right? But still, it's a lot of things. So it'll pretty much just go straight here. Are there obstacles? I don't think the weekly 10 is there yet. Yeah, there's nothing stopping it. So if you see price do this and it does the jab high support, takes out the jab high, it will go straight here or higher, or it'll either go straight to 20K without much of a pullback, right? And when I say straight there, I don't mean in 1 minute candle or 1 hour candle. I just mean it's not going to have a strong correction or it's not going to make a strong low, higher low before it gets there. It's just it's gonna either float up there or race up there, right? Without a strong, so it's not gonna go like this probably. It won't. So you get the jab high support on the yellow line. It's not gonna go like this. Boom, boom. It won't do that. It will like very, very likely go straight to 20K. Does that make sense? And it could go even higher. It could go to the weekly 10 and potentially do a failure pattern above the weekly 10 up to 20,600, like straight up there to take out all the mounting shorts. Because people right now are the open interest, which means the amount of people gambling, right? Or just using futures on stock market or particularly on Bitcoin. On Bitcoin, it's at all-time highs. It's never been higher, not even at the 64K top, the 69K top. It's the highest ever now. And so shorts are mounting up because of the CPI data release, right? And sometimes when that happens all at once, the big money that can essentially control where price goes on Bitcoin, because there aren't many players in Bitcoin right now moving price. Like 90% of trading volume are hedge fund bots essentially, and bots that will trade better than you and they will beat you over time. And so it will go straight there. But people who have been stopped out or liquidated out of the shorts once, twice, 3 times, they're going to try it a third time at the weekly 10. That's why I'm saying if it comes up here, it could easily go straight to 20,600 to take those people who are shorting for a second and third time at the weekly 10, because that's a common place for a perfect rejection to happen. If you look back in Bitcoin history, there are so many moments, especially in downtrends, bear markets, where price goes like exactly to it and just tanks, like a great play. But because of the CPI data release, if price gets up there, I would be weary of that. I would expect price to go above it, to take out a high leveraged, to liquidate high leverage plays, and then to stop out responsible people who are using lower leverage with bigger capital. But either way, that creates liquidity, which for new viewers, all that means is, the reason why they do that is because, let's say you have $100 million, right? And you want to short $100 million worth of futures contracts somewhere over here. Before then, you take $50 million of Bitcoin that you have on an exchange, on multiple exchanges, and then you sell all of it at once. So you're essentially guaranteed a win on your futures with leverage, right? Even if you're taking a loss on that Bitcoin on spot, which means no leverage, doesn't matter. You made so much money, like essentially guaranteeing a profitable trade. But if you have $100 million, you have to have $100 million across multiple exchanges that you're doing this. You have to have $100 million of shorts, right? So, and that's why these plays happen, because they have to get all the 100, whatever amount they want. They have to go up high enough and to attract more and more people shorting to meet that goal of I want 100 million shorts, because they have to. It's like attracting bugs or attracting bees or attracting mosquitoes. They need to attract them in order to get as big of a position as they want. They have to attract the opposite side. Does that make sense? All right. And then the big players, they have a bunch of the asset on spot, whether it's a stock like Amazon or whatever. This is just what happens across the board. And then they'll sell it on spot after they meet their quota on filling those futures. Now, have I seen that? Like, have I talked to people who have done that? No, it's just, this is my well-educated guess. All right. I haven't been on the inside of traditional markets to know, like, that's precisely what they're doing, but human incentive, it's just what's happening. All right, here we go. So watch out for that. So this move from the daily 21, even though I think it could go beyond 21K and above, but the very first move before any type of daily red candle pullback, or even 2-day red candle pullback before going up, it'll very likely go straight to 20K, but it could go to 20,600 because of all the reasons I said. So I'm not just showing you how price will move on this and when exactly that you might want to flip short-term time frame bullish, right? So I've done those already, but I'm describing, why, like the reasons why this stuff happens, right? So you remember it for the future. So again, if you're just jumping on here and you haven't hit the thumbs up button, go ahead and do that. And also, if you're just jumping on here on the stream, go ahead and hit subscribe and the bell for all alerts, because I am trying to do as thorough of a job as possible, helping you all remember not just what is going to happen and how it'll happen, but why. So the what, the how, and the whys. All right, now, so this is a different chart. So this is still Bitcoin, but on a different exchange. I pulled up a different Bitcoin chart without all the lines. All we have is so we just have the same two EMAs, the daily 21 and the weekly 10. So I've already described price on this. It just looks a little different without all my guides, right? I don't have the September open at 20K, all that. But here is where this move, and honestly, it could go even higher than that, folks. And by the end of this portion, I got to wrap up here because it's already 6:30. But I actually don't want to give you all the reasons why. But if the weekly 10, the same thing happens that I showed you on the weekly 21 or the daily 21 down here. If you see something similar happen where it gets above it, uses that support, then takes off, it goes over the jab high. 21, actually, by the time it gets there, it'll be a little higher. So this is an origin line. This is the most macro thing that you can have in price. Like, there is nothing more macro. than an origin line because it goes back to all the way to the beginning of price. The rally could easily go here. Easily. And kind of looking at the structure here, it meets this. Let's see, how many days has this consolidation been happening? So we're in $122 day consolidation. So does it make sense within this consolidation move if that were to happen? So just zooming out a little bit. So now let's take these guys off now that we know what we're looking at. Okay, with this origin line as an addition here. Does this make sense with this 122-day shape? So let's go ahead and take a projector tool. It's like a failure pattern above. And honestly, like I was talking about, so you see this, actually, let's do it more like this. And let's extend this. So see this trend line here? You know how a lot of pattern traders, they'll take on positions, either a short or a long. So pattern traders would long this if price can get above and then break out of it. So there are a couple ways to play. You could play the retest or the breakout of it, or the breakout, put your stops in, get stopped out in small profit, then re-enter on a support. There are a lot of ways to play this. But a lot of people, they'll take on shorts first, right? And they're ready to flip if it goes above, use it as support and breaks out. You could literally try playing it short first and long second. So pattern, people looking at trend lines and patterns, like they'll probably make it a triangle or come up with some fancy name, like a broadening wedge or some type of wedge. Like they'll make up some name. But so remember when I was talking about inviting flies, and you need to invite the opposite way in order to get a nice trap, right? Before dumping it the other way. Well, if it breaks out of here, you're going to invite a lot of people longing, right? Even though a lot of those people longing would be taking profits within 6%, but many swing traders do not. They'll just keep it, like people keep adding on longs and longs, or some people shorting will just stubbornly short over and over and over. So people who are shorting over and over and over will say, hey, I want to short here, right? And then maybe they don't have the $100 million they want. So now we got to say, man, like there aren't enough orders here. Like, how do we invite more? We'll go higher, invite even more people to short. So it could get into this effect here. Does that make sense? So this line is another way to invite the opposite positions. If you break above it, right, and then you start hitting other resistances, it'll invite more and more people to short. All right. So they could take on more positions. So it makes sense in a lot of context right here. What else do we got? And then historically, so I'm not going to go over all the rebuttals that my VIPs gave me for why this is actually a pretty strong case that this could happen. But so I'm not going to go over all that because I got to end this Bitcoin portion. But if you were to look back in history of all the times that Bitcoin price went, see this origin line here? That Bitcoin price went below an origin line and did a failure pattern. Actually, just like this, it went below, did a failure pattern, then came back below, right? It didn't continue a trend. It happens a lot. So but usually you do not have permission to go above an origin line that you just went below unless you go touch the next one down, right? But with baked into that rule, that's only been broken once ever during Bitcoin price history, or during Bitcoin's history, which was during Wyckoff, which was fabricated price anyway. A good time to break a rule, I guess. But the rule, there are no macro rules broken with this, because even though this next origin line down here has not been hit, that's fine. You can still do a failure pattern above and then come down and touch it before then you establish a weekly uptrend. Does that make sense? So that's another, I guess, piece of evidence why, from a large scale of things, why a rally up not only kind of fits into the scheme of things, but it doesn't break any rules, and it's not even weird. Like, even with, I'm the only one on YouTube who uses origin lines that I've ever met, because I essentially I made them up independently. Right? I'm not going to say I invented it, but but I'm the only one who uses them. And so my rules, they're not commonly known, but even within my own rules, it makes sense within the context of that. Does that make sense? So just be prepared that if you're bearish, particularly because the CPI data release came out and it's very negative, it essentially guarantees Jerome Powell will keep increasing rates and putting pressure down on the stock market over time. Within the context of, yes, everything is probably going to go down strong, within that context, that you need to know that that is your large time frames. So you can go up, Bitcoin can go up to a failure pattern above this, up to 22 to 23K, and still you're within being in the context of you're going to get a large move down on the large time frames. There's a lot of wiggle room north to still be in the context of this shit is all going to go down hard. But you could easily go up all the way to 22, 23K first. And the stock market could easily rally a proportionate distance as well. I think we measured out, I think it was like 7 to 8% rally is what we'd be looking at. And that would take Bitcoin up like 15 to 18%, and hopefully it's 18. Yeah, that's 18%. Yep. So stock market, if this were to happen, if you follow stocks and SPX and all that stuff, you would be looking for a move that's about 7 to 8% up, and on Bitcoin it'd be up to 18. So between 14 origin line is about 12. So between 12 and 18% rally on Bitcoin, and I really hope this was helpful because it's really easy to not just get your ass kicked trading the wrong direction because there's good reason to, right? CPI data, everything's going down, right? And you try shorting, get your butt kicked. Okay, well, it's going to go down this time. You try it again, get your butt kicked. And then you're angry. And then the next move up, you short even harder, and you get your ass kicked 3 times in a row. You can lose so much money getting trapped in that mentality because you weren't able to, you didn't watch a channel like mine to prepare you for it, the move that I don't think is going to happen, but it is kind of 50-50 at this point. But if you're not prepared for that shit, you can get trapped in the psychological, I guess, drama or stubbornness of just trying it over and over and over, and just, you can destroy your account. And I hope if I save, one person from destroying their account, because there's damn good reason to be short. If I help just one person with this video, I will be happy. And again, feel free, if in the end you do feel that I helped you in a way, just leave a comment on a future video or this video and let me know how I've been helpful to you. So let's move on. All right. Hey, Harrison. Yeah, Harrison, you've already been in the group. Okay. Let's do Ethereum before I do questions. Okay. Ethereum price action is honestly more predictable than Bitcoin still. All right. I've been saying this for a while, but it's true. And yeah, you just got a really nice chart. After the merge. So you can see how the merge stuff stuck out like a sore thumb, right? Anticipation of the merge. It was a trap. Came straight back into the beauty of price action. So what is price action doing right now on Ethereum? It's at the top of a trading channel that is how big? How many days long is this? A 70-day trading channel. That's a mid-size, that's still a small-term time frame trading channel. Cardano is interacting with a 370-day long channel, like it's from its top. So similar to Bitcoin's daily 21, you have structure giving you a clean breakpoint on when you flip from bearish to bullish. So right now, I would lean a little bearish on this, right? Even if it does a quick juke above, like I would say, when it comes back down to touch the screen line, it's probably going to fall through. And you know the exact moment to flip. Like when the probabilities flip. Okay, I need to flip long. When is that? It's similar to how I just went over on Bitcoin. So for the people watching this recording of Ethereum, you might want to go to my YouTube video recorded on the same day, and I give extremely specific ways that price would dance on a resistance level before it breaks out of it, or as it breaks out, okay? So you might want to watch that and skip forward to that portion. But, and it's when I'm drawing with a yellow, if you want to skip to it, go to that Bitcoin portion. You'll see me drawing like this with this yellow stuff. All right, now, but you have a clean break here. So let's throw on some EMAs to layer on top. What else do you have here? You have the daily. So this is technically the 1 hour 200 EMA, but on Bitcoin, it's the same thing as the daily 10. Mathematically, it's the same thing. So you actually have a lot of guides here. You have EMA guides, you have structural guides. Where's the daily 21? Daily 21 is a little higher. So Bitcoin's up here and Ethereum's down here, but you still have a major EMA there, right? So it could actually get slightly trickier with Ethereum, because you have two things that are just a couple dollars away. See how many dollars? It's $6 away. You don't know if this is the breakout stuff, or if you need to break out and use this as support, right? That's the only thing making this a little tricky. However, you have two things in the same area. So if it starts, aggressively getting over the daily 10 and has used this as support, you know with even greater probability on top of a structure that you need to flip long using the same, kind of primary rules and things to look for on small candles that I showed you on my Bitcoin portion of this. Making sense? So for new viewers who haven't seen this trading channel before, I'm going to zoom out so you can take a snapshot and copy this, because you're going to want it. Because there is a damn good chance that Ethereum just comes right back down into the channel. But you at minimum need the top line. So this date back here is August 13th. And then you bare minimum need this top line. And then once you make the top line, if you want to feel fancy, even though there is an okay chance Ethereum breaks out of this and then you don't need this channel anymore, you could feel fancy and try to do the whole thing. And also new viewers, since you haven't seen trading channels this sexy on anybody else's channel, you can go ahead and hit the like button right now and subscribe and hit all alerts so I can keep you in the know. And that's Ethereum. So throw on the daily 10 MTF EMA, or what I prefer is the 1 hour 200 EMA, because it's smoother, and use this channel as a guide. Hell, let's go to the 1 minute candle. Like, look at, I've had this channel line here for over a month, and look how perfect it is. I mean, how close was it? 1301.40, about 30 cents off. That ain't bad. Like, these lines work. I mean, they are very, very, very exact, right? Okay. And to break down on Ethereum, though, so I didn't do a breakdown on Bitcoin because I have all these levels, but if Ethereum does start breaking down, then, you can simply just use the rest of this channel as your guides. These will be your bumpers. Sometimes price will fly through a bumper and hit the next one, or fly through two bumpers like it did here. See that? And oh hell, yeah, look, zoom in here. So not only did my top channel right now work within 30 cents, but come down here, price action from today also. Just look how well this works, everybody. I mean, it's pretty freaking precise. So these bumpers will work. It's just a question of, does it fly through a bumper and hit the next one, or how is it going to interact with it? So 1180, let's call it 1188. So $2 off. Yeah, pretty close. On a percentage basis, 0.2% away. All right. So if Ethereum does break down, you might want to cut, and you don't have this channel on, you would want to come back to this video on the 13th of October and draw this channel as I have it, and then you'll have your guides. Other than that, on Ethereum, if Bitcoin price does go up, so your upper targets here, then I'll be done. I don't think this upper, I don't know, will this be hit? Let me see. So if Bitcoin goes up 18%, nope, it won't hit this. So Ethereum, it's extremely unlikely that Ethereum will go up to this origin line again if Bitcoin goes up to 21K. So at the exact moment Bitcoin is trying to retest its next origin line, Ethereum will only be about here, because it'll be about the same percentage. about 14%. So I think it was 12% for Bitcoin to get to its origin line. And not only that, Ethereum might be lower than this because look at Ethereum versus Bitcoin. As of right now, Ethereum is not outperforming Bitcoin. So if Bitcoin goes up 12%, Ethereum might only go up 10, right? So in order for Ethereum to hit this this higher target, which is an origin line, to get up into the to the deep 15s or low 1600s, Bitcoin's going to have to rally to like 23K. So if Bitcoin were to truly hit the upper target that I have for this this bear market rally potential, then this becomes your target. But as Bitcoin hits this, its version of this origin line, Ethereum will not be there because it's farther away and Ethereum is underperforming Bitcoin, right? So keep that in mind if you are trading both and you kind of pay attention to both, and that should get you through for Ethereum. All right. Now I'm going to do, I'm going to have to start covering XRP, folks, because, oh my God. All right. So I just did an XRP video, and I freaking nailed it, even though I made 2 or 3 guesses, but it was pretty freaking precise. So in that video in general, I did, and go look at it, like go watch it. Even though it's 14 minutes long, you could skip through maybe the first 5 minutes and I start getting into this black triangle. But you might want to watch it. I believe it was on the October 12th or October 11th. I first gave reasons why it was more likely to break down here as opposed to taking on longs because it's at the bottom of the range, right? So the beginning of the video is, hey, this is how ranges work. You literally just can continue longing the bottom of a range and taking profit somewhere in the middle at the top and maybe taking on shorts over and over and over. And I posed the question, how can you tell when there's a higher probability that it will be the first time something different happens? And I went through and I spent 5 minutes explaining, I think it's a higher probability it will break down here. Therefore, I personally would not take a long here, even though it is at the bottom of the range and I like longing the bottom of ranges. But I wouldn't do it here for this reason, right? And then I gave 2 primary breakdown targets using this rainbow right here. So this is a follow-up. Watch. I said it'll either go to this gray line or it's going to go to this blue line, right? And if it goes below this gray line and it does bounce here, right? Actually, I said if it comes out here, it's probably going to bounce. Worst case, bounce here. But I said if it does break the gray line and bounces here, then what's going to happen is it's probably going to race up to the bottom of the triangle and get rejected. I don't think it can join the party, rejoin the black triangle party. However, if it had bounced here on the gray line, it could hit the reset button, then jump right back in and then go touch the top of the triangle, right? That was essentially the whole analysis, and I took 14 minutes to explain all the whys and how to look out for it. So if I could draw over this gray line that is tied to the 1 hour, it's not an MTF deal, just going down to here. Just take a look. Now let's go to the 1 minute. And XRP is hard to get right. XRP is its own animal. So I feel, so even if you had watched that video and you said, okay, here's that first line he was talking about, I'm going to personally try to take a long position, even though I don't give financial advice. I've given you technical analysis, and what you do with technical analysis is your deal, right? Whether it's good or bad. Anyway, had you followed that and taken a long, for example, which I never suggest you do, you would have had a 1.7 bounce off of there, and you would have had plenty of chance to put your stop well in profit. Even though you get stopped out, but you would have made money being wrong, right? Unless you're somebody who, like me in this landscape, I'm only going for 1.5% moves. So had I played this, I would have been fully right, and I would have already taken profit about 1.5% move up. I would have been done. But most people don't trade that way. So you would have made money being wrong because you entered at the right time, put your stop into profit, and then you were wrong, but profitably wrong. Does that make sense? That was my one of two primary targets from that video, and the other one was here. So on really high leverage, you probably would have been, yeah, you would have had to try this one twice on higher leverage. On low leverage, you would have gotten it the first try. So it did try to bounce here, right? See that? But then it came down, and then, so on high leverage, you probably would have had to try this twice. But still, it hit it, I mean, pretty damn well. So where's, so with that, I guess, building rapport of XRP price, even though, you know, if I keep doing XRP analysis, which I probably will do because there's a lot of viewers for it, and I got to do what viewers want on YouTube to a large degree. So I'm kind of the YouTube algo's bitch, if I can be honest. But moving forward, I don't expect all of my XRP analyses to get it that well, okay? Because XRP is tough. It's its own animal, and I have not studied it like as a student to its price as much as I have with Bitcoin and Ethereum. And with other altcoins, they follow Bitcoin and Ethereum so well that my having studied Bitcoin for so long and its price movement, it translates really well. But my personal training and self-training, I'm going to let you know, like over time as I make these videos, XRP is finicky. And so just take my analysis with a grain of salt, even though my last video I did do exceptionally well. I'm not promising to do that well in the future with XRP. It's a tough animal. But what I can do for you here is I can tell you what to look out for and when to flip, positions or flip your mentalities on where this shit's going. All right. If you don't have to make this a triangle, but what you do need to do on XRP, if you're interested in it, you need to make this bottom trend line. Period. It's so, I'm on the 15-minute chart. It goes back to September 22nd. Just draw a line. Okay, that's your first basis point. And then your second point is, even though no one else on YouTube, including you don't use origin lines because they're my thing. There's an origin line here. So you need to make a shorter version of this. And the way you can do that, and again, this line was here before all this price happened. Like, I did not put this line here after this happened. So you can tell my origin lines work, right? Because it's here before. All right, anyway, so you'd want to go back in time to like June of this year and look at these, just look at how this origin line is, and you want to make this line as well. And then if you want, you can drag it forward in time and backward in time if you want. Because it has a heavy interaction in the past, heavy interaction in the present, and it'll probably have interaction in the future too. And it's going to be a good line. All right, so you need these two lines. Okay, now the third thing you need to understand when your thresholds of up or down probabilities flip. Let me go to the week. You're going to need a line at these candle bodies right here. So you could just pick one. I would probably pick the higher one because this is technically a little higher. So I would pin it. You're going to need a line around 532, okay, 53.2 cents, right around there. This is going to be a key level. So make a line there for when we go back to the small time frames. And the way I like to mark off candle body openings and closings, just so I know in the future, like what the hell was it? Why is there a line here? I personally always make my candle body markings, whether it's a daily open or a weekly or a monthly, I always make it white and I make it dotted specifically. So anytime I see a white dotted line on my chart, I always know it's a major candle body, right? Okay, because when you go down to the 5-minute chart, like you can get disoriented pretty quickly and say, oh God, what is that, right? Okay. All right, those are 3 things you need on your chart in order to get a good grip of XRP price here. And if you can add a 4th thing, just put the top of the damn triangle on here. All right, now XRP and EMAs, I would just throw on the 1 hour 200 EMA. You'd need to use an MTF EMA, and this is the final guide. right? So we have a few things in play that are key things. The candle bodies of the week, bottom of the triangle, the daily 10 EMA, which is the 1 hour 200, and this origin line. And I've shown you how to draw them all. So now, no matter what happens, even without me predicting which way it goes, you have your bumpers. So if it goes up to one of these, expect a strong probability of some reaction, like a pullback. And then if price goes straight back up to it after hitting its head, well, fuck, it's probably going to break out. And then you need to use the methods that I've shown on my Bitcoin portion and Ethereum portion here today of how do the tiny candles, 1 minute, 5 minute, how are they interacting with that guide? And you can easily tell without candle closures of 1 hour and daily, just how the small candles are interacting. Did they get above, use it as support, then take out the jab high? Well, then it's getting ready to break out after having hit its head on this. Does that make sense? So these four things, or no, the three non-EMA things, those are your guides. Now, how do I use this daily 10 to even further increase my guessing of how price will interact with these guides? Does it have an increased chance to eventually go above it or an increased chance to get rejected by it? So let's dive. So this is how you use this. Right now, conveniently, the daily 10 is right at the first bumper. So it's adding extra resistance. So if price can get above both of these and come back and use it as support, so something like this, make a jab high above it, come back down, find support, and then take out the jab. So the first high, boom, you know that two different groups of people will be buying. People who focus on EMAs, especially the daily 10, and people who do pattern. You're going to have two different groups of people buying, and it could be a pretty violent move up. And again, it most likely needs to get above it, then use it as support, then break the jab high before it violently goes up, right? Even though it's possible with XRP, since it does its own freaking thing, it could just go straight through. But anyway, this is what I would look out for. And where would it go afterward? Well, it has a strong chance of going straight to that weekly candle open. That's it. And then you repeat the process. How are the tiny candles interacting with this? Did they get, you'll probably get a pullback. You'll either get a pullback, so some type of rejection, or you'll go above it and use it as support. So in the one that it goes above, use it as support, it's obvious. If it takes out its jab high, so the jab high means the first time it goes above, so first time it went above this line, when it takes that jab high, you can assume it's probably going to break out of the damn triangle. Even though it could also then bump its head on that and do it all over again, right? It could go boom. But I would say at this point, if it could get above the week, if the weekly candle could flip green, use it as support, I think it's just, I think it might even ignore the top of the triangle. I think it could just bust right out and fly through all the people trying to short that, because there's going to be a lot of liquidity. But if it gets rejected from there, same deal. If it could start forming higher lows on tiny time frames like the 5 minute, then get above, use it as support, and take out the first high it made as it got above, boom, same deal. So rejection from it doesn't rule it out. It just depends, can it maintain a higher low structure on its way up to here, and then get above, use it as support. And then if can, then your probabilities flip yet again, and then it's just going to keep charging. And we've already gone over the target. If all that were to happen, which honestly, if Bitcoin does rally here, that will happen, then your big target is 70 cents. It's the next origin line up. And we've already identified that XRP does respect my origin lines, and that would be your target. Would it go up there in 1 hour candle? No. All right, to the downside, a breakdown. It's the same thing. I already gave you the bumpers, right? It's all about this line right here, this origin line, and I showed you how to draw it. So it's kind of reverse. Does it go below it and use it as resistance, or come up to a lower high and then use it as resistance and then take out the jab low? So right there, right when it takes out the first jab low below it, when it takes that out, that's where, right? Let's make a line that horizontal. Yeah, so right there is where your probabilities flip super strong to the downside. And it's the same for every asset. Price of oil or black market testicles, doesn't matter. It all works roughly the same. Although, if I can give XRP some credit, XRP is kind of its own animal and it moves differently than most of anything I've ever seen. So that's your XRP analysis to the upside, to the downside, exact targets, and exactly how I would anticipate price moving and exactly what you need on your chart to stay in control. All right. I will do about 20 minutes of answering questions. I'll probably only spend about 2 minutes answering the questions instead of 8 each, right? So I can get through the same amount of questions here. Oh, all right. Okay, and for anybody who's gonna say, "Oh man, why is he skipping over my questions?" I look at super chats and my community members' questions first, and my community members have the emblem by their name, like a star, either green or blue or whatever. So I don't have time to answer other people's questions who aren't a community member or a super chat person. All right, so Adam Barrett. BTC at a key level, do I close my short, LOL, or is this booger going to 20K? Well, I mean, I showed you. Oh, no, you probably asked that question before I did all that, didn't you? Yeah. So right now, it hasn't used it as support. Yeah, I'm still in, not financial advice, I'm still in my short. So look at it on the 1 minute. Each time it comes down, it's not finding this white line as support. It's finding something below it. So yeah, it's still not super probable that it's going to bust up to 20K yet. Is it getting damn close? Yeah, it is. It's kind of getting close. Yeah, once it takes out this high, you better be out, man. 19,490. So that could be a good place. Honestly, I need to set my stops there. I need to make sure my stops are set. 19. So I don't get my ass kicked. All right. Yep. Yeah, I'm still in mine. So the trick that I showed you and on how price behaves on small candles with obstacles or supports. So that's why I'm not second guessing myself. I already know when do the probabilities flip. And honestly, if I'm at my chart, I would even close my short. I would bail on it before my stop gets hit up here if I can see price firmly establish this as support and simply take out this high. I would probably, and honestly, this could be a good place to set a stop on. Yeah, honestly, I might move it there. But it still hasn't used this as support and taken this out yet. So this is another good option for, knowing when to bail. You got two choices, depending on how much leverage and how, big of a position you got. Yeah, there you go. It's getting close to that point though. But it still could just roll the hell over. I mean, it really could. And again, I did mention that it is possible that it does one more FU move and then goes down. That is baked into my analysis as well. But those are times where you just have to get stopped out and re-enter, right? You have to try twice sometimes. You can't force your first attempt to work. Like, you just know when to bail and know when to retry or know when to flip your positions. But even then, I probably wouldn't try shorting the FU candle or the FU move because there's too high of a risk that it's going straight to 20K. So I probably wouldn't try it in between. I would just say, hey, there's another trade that wasn't my setup and I don't like it. So yeah, I personally would not attempt to short the FU candle because there's way too much of a risk and a strong chance that it goes straight to 20K. All right, here we go. That's a good question, but I think you asked it before I went over all that finite stuff. Thoughts on my entry levels for... Hey guys, I don't think I can... Okay. All right, so you're asking Discord questions where I'm not recording for public. I can't tell you entries and shit like that. I'm not going to do it. I don't know. I'm not educated enough on the fine lines of financial advice and stuff. I'm not going to do it. I can't tell you entries, but I can tell you what I think of your entry maybe, and say something, and thoughts on entries for STX KSM. All right, Kusama. Yeah, so I'm not going to talk about entries, right? Even though that's your question. I'll just tell you where I think the bumpers are. And what you do with those bumpers is up to you. Because those bumpers could also be used as a short, right? If it breaks down from it, then you can interpret it either way. Oh, KSM is down here. I think KSM's pretty obvious. This is like a doubly strong bumper. You have a, what do you call it? A trend line plus a horizontal at the same place. That's a pretty good bumper. What were you saying? Longs though? Or just entries? I can't find your question anymore. My brain is not working well enough. Yeah, so that's KSM. But you need to watch out for Bitcoin, because if KSM is just getting there and Bitcoin is taking out its jab high, then this is going to follow Bitcoin and keep going up. So just make sure if you're trading an altcoin that you're using Bitcoin, your understanding of Bitcoin as well. Like you really have to, unless it's Luna Classic or maybe even XRP or Quant, like coins that don't follow Bitcoin very closely. You can either ignore Bitcoin analysis as you're doing it, or use it as a loose grain of salt. STX, what is STX? Stacks? I'm not familiar with this one. Ugh. Well, this coin is underperforming Bitcoin. So any position that I would enter in, so what I'm about to say, it's what I'm doing with Ethereum as well. So I already showed you during the stream, Ethereum is underperforming Bitcoin, right? So if Bitcoin on average has a move up in an hour or whatever of 2%, Ethereum's going to be 1.6 or whatever, right? But if Bitcoin goes down 2%, then Ethereum will go down 2.5. So therefore, if I'm going to try to be long, I wouldn't want to long Ethereum, but if I am short, I would prefer to short Ethereum, right? So on this one, same concept. It's underperforming Bitcoin by a large degree. So I personally, if I were to play this one, I probably wouldn't want to play it long. I would... That's the daily 21. It's pretty far away from that. That's not quite in play yet. I would throw on for a bumper. I would make this trend line here. And here. And what you could do here is, because you have two things, you have a double bumper, right? So you have double the chance, not technically, but there's extra reason why it would react to this. Maybe eventually it would go above it, but you have a strong chance to get your stops in profit before being wrong, so that if it does go up, you are paid to be wrong, right? And I like those types of trades. So if you have the mentality of, instead of I want to make a lot of money from trading, if you simply get into the mentality of, is this a setup where I have an extremely high probability of putting my stop in profit? Regardless of what happens in the next 8 to 72 hours, just within the more immediate sense, is this have a high probability of at least going the right direction for a little bit so I can put my stop in profit? And that, for this one, it's a pretty high probability, because it's a good bumper, right? And that level currently, so this level will change, right? It's changing, but it's at 31.53. All right, that's that one. Okay, here we go. Super chat: seeing Kawhi on on BSC going parabolic. Check chart. Kawaii. On Binance chain. I see it on Pancake Swap. Is that okay? What? This is going no, it's still on a downtrend. Yeah, might be the worst chart I've seen in a long time. Yeah, it's down 99%. Nah, no way. And it almost makes me think that, I don't know. I'm not making any claims, but it almost seems like maybe somebody spent $2 to spam. I don't know. If so, hey, whatever. It's your deal. I mean, yeah, if you go to the 1 minute chart, sure, it looks parabolic. Yeah, you're right. This is parabolic depending on the time frame. Absolutely. So you are correct on this time frame. But if you look at it from a zoomed out perspective, it's in an aggressive downtrend with lower lows and lower highs. Yeah, it's a strong move though. What percentage was this? Yeah, 22% move in just a few minutes. That's pretty strong. All right. Yeah, daily 21's key. All right, Nate, Daniel. If the coins that was hot last time, like VR8, Link, Sandbox, etc., don't make an all-time high, then it's say 40 to 60% of it previous all-time high. Good. Yes, that's a great target. Okay, so community member Nate is asking. Okay, so for folks who might be newer or not on my channel a lot, it's a statistical, like it's math. Like you can't argue with it. The altcoins from 2017 that had way bigger gains on average than altcoins this run, because there were fewer things, right? Even though there was probably 1/4 of the money in crypto, there were way fewer options. There was no NFTs sucking money out of crypto, like make its own vestigial space. Even though it's all going to go away, that space will be done. But the fact is, like it stole money from the runs of crypto this time. Anyway, but the math behind it is from 2017. Those same coins that did extremely well in 2017, it's like 70 to 80% did not break all-time highs. Litecoin didn't. Dash didn't. Monero didn't. Tons of others. It's like 70 to 80% of non-Bitcoin coins from 2017 specifically. Right? Apply that, the idea that it's probably going to happen again. You're probably going to have roughly the same percentage of the new coins from 2021. They're probably not going to get to all-time highs, right? It's actually statistically probable that any coin that you liked, right, unless it's Atom. Atom is very likely going to. But outside of Atom, but even Matic is in that pile. 70% chance it never meets that high again. And so he's asking, because that is a known thing, because it's got a strong chance, a probability. It's not guaranteed they won't, but it's got a probability of not going to all-time highs next bull run. He's asking, is it reasonable to think they'll go 40 to 60% up? Yes. Yeah, I've already backtested that because I was interested in, I was kind of tracking some of my 2017 coins, and a lot of them went up to their all-time high or went about 60 to 70% up. So 40 to 60% is totally reasonable. All right. I'm going to have to wrap up here in a few minutes. Hey, thanks, Mathis, for letting me know that I've been helpful and being the tier member has been helpful. It makes me glad. All right, gifted 5 Cosas Verdes. Shit. What does that even mean? What does it mean to gift 5 memberships? I don't know what that means, Brokoshi, but whatever you did. Oh, you gave it to people. Well, good for you, man. I didn't even know you could do that. Shit. There's a lot of enthusiasm there. All right. Harrison goes down. Do you think this bear market will last through 2023? If so, what will be the BTC price range? Okay. I'm going to in Q1. So I'm going to answer this by making you stare at Nasdaq futures. The earliest possible, or reasonably, that Bitcoin could separate from the stock market is after line A was hit, right? Like, it was almost a guarantee line A on this chart. So it goes back, to the .com bubble, right? It's just the median line. It's always hit. It always will be hit, probably, on Nasdaq futures. And that's why all the analysts on CNBC or Fox Business saying, "Oh, the Fed's going to pivot. It's the bottom." Like, bullshit. Like, not only is line A almost definitely going to be hit, but because it fell from so high to it, line B is also almost definitely going to be hit. Like, how are you people paid to be on national freaking cable news telling people this shit? I don't know. I made this chart in like 2 minutes, and I could tell you're obviously wrong, right? But anyway, so that's how, this chart's really cool. And if you want to copy it, definitely feel free to do so. And the ticker is NQ1. You can see it behind here. NQ1 exclamation. Hit enter on TradingView. Okay, so to answer your question about Bitcoin, going down through. Well, if Bitcoin is going to separate from the stock market, it needs to do it here. Like, soon. Because if the stock market goes all the way down to B, well, the stock market could reverse from B, and if Bitcoin reverses at the same time, well, then it never separated from the stock market, right? But this is this year. It could get there this year. So if you start seeing Bitcoin outperform the stock market, which I have a chart for that. So kind of like the thing, like, oh, there's an app for that. I have an app for that. So if this trend versus this is Bitcoin versus the stock, essentially SPX. If this trend, you can see it very clearly, like it's a 51-day trend. If the trend can continue, as the stock market or the NQ1 is toying with line A, then you actually have a chance that, there is a chance Bitcoin's already bottomed. I'm not going to lie. Like, it's probably 1 in 5 chance. But the chance will grow quickly to a probability if, it's at that, it's at the point where if it's going to go, you're going to see it soon. Like, the probabilities will flip very soon as this line is toyed with. So it is possible that Bitcoin's already bottomed, and then it maybe just ranges for a year and a half and waits on the stock market to recover. That's possible too. So there are too many things that could happen for me to give you that guess. So if I could rephrase it, I would ask, when do I think the weekly 10 EMA will go above the weekly 21 EMA on Bitcoin, which is the same thing, but you can envision it better. Because that essentially is the beginning of the bull, or that's the end. That's the definitive end of the bear market, right? Even though you could do one more quick low, like either a double bottom or a macro higher low, like coronavirus was the macro higher low to the 3,200 in 2018, December 2018. So it doesn't mean straight up from there, but it means the bear market's over. And you could start scraping up at that time. So when do I think that could happen? Let's just put on the weekly chart and look. This will help you answer, kind of get a feel for your own question and how to answer it. I'm going to use an EMA fill on the weekly, and I'm going to change it. I'm going to change the inputs to 10 and 21. There you go. Takeoff price. Boom. So right now, staring at it, doesn't look like it's going to be anytime soon, right? If I personally had to make a guess, I already have my guess here. Now I'll actually answer your question. But I wanted to give you the tools to do this for yourself. Where is it? Happening right there. Okay, so if I had to guess, all right. So what this is this is the halvening, the next halvening, right here. This is 200 days before the halvening. This is 400 days before the halvening. And every bear market has ended between 200 and 400 days before the halvening. Does that mean it starts screaming up at that time? No. But it helps guide, it's a good guide to your question. So you can do this by yourself. So just put Alt V for vertical line. So if I go like this, Alt V, bam, vertical line. So just in the halvening date, I think it might have changed a little bit. It might actually be earlier than this now, because all of the hash rate coming in, Bitcoin, its blocks are 10 to 12 minutes long, and a lot of them have been closer to 10 over and over. So this halvening rate was calculated a while ago based off, it averages between here, kind of bounces between those levels. And I think it's been moved up. But anyway, you can look at Google, when is the next Bitcoin halvening, or the Bitcoin halvening countdown, and just put a vertical line there. Then use your measuring tool. Go over 200 days, put a line. Go over another 200 days, put a line. And it's probably going to happen somewhere here. So what date is this? This is in the middle of this is July 23. So it is kind of likely, actually, that Bitcoin's bear market will have already seen a low by then, and it will be trying to round out, or not just round out a bottom, but it'll be trying to go up by that point. But it could take until this point. That's happened before too. So just use this as your guidelines for that. I honestly don't know if I want to make a guess, but I'm guessing be macro bullish somewhere between these lines is a thumbs up. So this is October, late October 2023, and as early as, I wouldn't guess it's going to be this early, but March 2023, when this flips green. See how it's green here? So it'll flip green somewhere in here. Does that make sense? Or somewhere close to this line. So here to here, somewhere there. Because I don't think it's going to flip green here. That's too deep of a bear market for stocks, since all of Bitcoin price history, like when it flipped green here, the stock market was not in a bear market. It was at that point, like a 9-year bull market. And this is the first bear market that Bitcoin's ever seen for the stock market. So it's not going to hit it as early as possible, unless you see Bitcoin versus SPX continue that trend, as in Q1, or Nasdaq futures hits line A and Bitcoin separates. But you'll know what to look for if that's going to be wrong, right? So I'm letting you know my guess, and if I'm wrong, how can you see it right away? So hopefully that's a fair answer. That's a really good question. So I spent a little bit more time on that. Oh, somebody's asking me about SPX, not S. Oh, I looked at ST. Okay, I see. If this shit rallies, it's just going straight up to this right here. So if Bitcoin goes to 21K, the stock SPX will be at 39.50, almost precisely. That's where the stock market would rally. That's 7.5%. That's it. Throw on the daily 21. If it does a failure pattern above both, well, then it could do a failure pattern, like, kind of. It probably won't. That's probably as high as this will go. Yep. That's SPX. I also like US 500. What did I say? 39.50 or something like that. So this US 500 is the futures of SPX. It's not quite the same origin lines, but SPX for strictly SPX. If this rally turns into a real rally, that is your target, right? I don't think Bitcoin. No, Bitcoin's not going to drop straight. It's highly unlikely because of SPX's daily candle closure. It just bullishly engulfed 1, 2, 3 candles. It ain't going straight down. No, sir. And actually, SPX won't go down tomorrow either. Worst case scenario, it hangs out here 1 to 3 business days, so potentially Friday, Monday, Tuesday, and then go down because of this bullish engulfing. It's not just going to go straight. I don't think it's ever happened once, like in the hundreds of year history of this. In this case, a strong down move, bullish engulfing, because one of my VIPs challenged me to do this, because that was part of their case for Bitcoin. It's not just going to bounce, but it's going to rally here, like 21K plus. And this was one of like 10 things they rebutted me, and they actually kind of I had a stronger bearish bias before they did that, but now they flipped me to about 50-50. But at least we know the exact point where we know to flip. The daily 21. It's that easy. Yeah, so I think if we're going to get a down move on Bitcoin to initiate down to 14K, it would be after Friday's closure. So the very, very earliest that move I could see happening is around 4:30 p.m. New York on Friday. But even with that, I would still guess it's Tuesday or Wednesday of next week at the earliest. But in terms of being reasonable, like the earliest totally possible within reason is the end of the day tomorrow. Can you look at MTRG? And then I think I got to go. Damn, this held up pretty freaking nicely. Daily 21 on this one's your best guide. Damn, honestly, it's playing this line really well. It almost looks like you need another one, though. All right, I'm going to tell you how I would play this if I liked this. Honestly, this looks totally volatile enough to play on spot. Damn, yeah, it is. I don't know. I kind of like the 5-minute better. Yeah. Okay. So I would look at this chart on the 5-minute. I think you're going to be able to pivot correctly the fastest. So you're going to use 2 EMAs, one on its own time frame. So on the 5-minute, just use the 200, and then MTF EMA, the daily 21. So for your short pivots, I would say as long as you are above the orange line, which for me is the 200 EMA. If you ever go way too far above it without using that support, you got to come back down to test it before you you got to come back down to test it. So at least it's coming down here. Like it needs to test this, and it's just going to test both at the same time since it also went above the daily 21. So it's first extremely likely it's going to hit exactly right there or slightly lower. All right. First off, but I would also expect a bounce there because you have a double reason why it would continue to go up. Now, could it just form a lower high then go back down? Yeah, but you're probably going to get a bounce from there. So your general short-term direction, I wouldn't be long on it personally until it can prove. So zoom into here. This is a perfect example. Until it can prove the orange line or the 200 EMA as support. Got above, leveled out on it. There we go. And then I would use this as a guide. If I were, I would just use this as an additional guide, but not as a micro time frame. So yeah, the 5-minute chart with the 200 EMA, for the 5-minute, and then the daily 21 is kind of your bumpers. Like, you're gonna get a lot of stuff right with those two guides. All right, I gotta go before my wife gets madder. And so next Tuesday, Tuesday and Thursday, 6 p.m. New York. We'll see you next Tuesday. Be safe. Remember, daily 21 is your threshold, and the shit could rally. So if you're bearish bias, if you have a strong bearish bias, and you're not prepared for not just a bounce but an actual rally, you're gonna get screwed.